Hello and namaskar viewers, I am Sanjeev Pandya welcoming you to another edition of the Tax Talk with AJ right here on your favorite TV channel ITV Gold. Hope you're doing well with your taxes, but if you're still confused and if you're still one of those who really haven't really thought about filing taxes, this is the time to do it soon as possible. And you need advice, you need a guidance when it comes to tax returns. Sai CPA Services is just around the corner. You can reach them by calling 908-380-6876 or visit their website saicpaservices.com. They are a full-fledged accounting firm, and if we leave all the accounting services they do on the side for a second, they are the known for the tax preparations, because for personal taxes, corporate taxes, they know and they do taxes right for their clients. And that's why I suggest that you should contact Sai CPA Services for all your personal tax needs. In-person appointment, over the phone or over the Zoom, all kind of meetings possible. And I want to add one more thing. In case if you are into IRS audit, just God forbid, Sai CPA Services will guide you, advise you, and they will help you to come out of that audit scenario. So do contact Sai CPA Services, and we'd like to thank Sai CPA Services for sponsoring the show. With that note, I'd like to welcome Mr. AJ Kumar of Sai CPA Services. Sir, how are you?
Thank you, Sanjeevji, and thank you for the kind introduction.
Sure, of course. Anytime, because Sai CPA Services, they are known for these services, and that's what we need to let our viewers and people know, that for the because people do get confused. Sometimes they don't know who to go for the right tax advice, and that's what Sai CPA Services is all about. All right, now when it comes to advice, I don't know who advises Fed and what they do and how they decided. I don't know, but I personally thought, the day Fed raised the interest rate by 25 basis points, on that day in the morning, I was thinking maybe Fed will not do it. Maybe they will just pass it on this time. And because, of course, inflation, is around, and on top of that, many tech companies been laying off hundreds of thousands of individuals, right? So I figured maybe this time they'll just not do anything. They will not touch it. But at the end of the day, what do we find out? Fed raised 25 basis points. This is the 9th increase in a row.
Absolutely. So a lot of people did believe that maybe Fed will just skip this meeting and not increase the rate, and maybe in the next meeting they can consider it.
Yes.
Especially with the banking fall down. I mean, we know a lot of banks are struggling mainly because of the increased rate, and that's why a lot of banks are falling apart. So a lot of people were thinking federal government will not increase the rate, even though Fed has indicated 50 basis point earlier as a rate increase. So at the end of the day, they found the happy medium, they found the hybrid. They did not increase the rate by 50 basis point. They sort of settled down by increasing the rate by 25 basis point. But Fed chairman did indicate that they don't intend to increase the rate in the near future. Yes. For some time, until they really see the situation where it's going.
That would be very nice of them, that if they don't increase the rate, let's not touch it. And I think UK also followed US's move. They also made changes on their interest rate, because global recession is just around the corner, and the way tech companies and other big giant companies are laying off people from their workforce, it is a very alarming situation. But now, okay, let's bring that angle to our tax return. And obviously, for everyone, AJ, the question is how to save money on their taxes.
Absolutely, I agree.
But at the same time, I always say that you should do your taxes right. Just for the sake of saving the money, do not make any mistakes or do not take shortcuts. So now let's talk about, what are the ways that what are the other tax credits that they can take to save money?
Absolutely. So taxes are on everybody's mind. We are going through the busiest time of the year. This is the tax season. This is what you prepare throughout the year. Now, everybody wants to save money on taxes. Nobody wants to pay taxes. But at the end of the day, as you rightly said, doing right is more important than saving money.
Correct.
You want to save money, but there is no excuse for not doing it right. You cannot go in the gray area. You cannot do silly mistakes. You cannot take stupid deductions, stupid credits. doing it right is more important than anything else.
Absolutely, I always agree.
So let's talk about the tax credits that you can take. So in 30 seconds, we want our viewers to understand what a tax credit means as opposed to tax deduction. A tax credit reduces your tax liability as opposed to a tax deduction, which reduces your taxable income. Let's say if your income is $100,000 and your taxes happens to be $20,000. A tax credit will reduce your $20,000 of tax liability, meaning reduces your tax dollar for dollar, while a deduction reduces your taxable income and reduces your taxes by 20%, 25% in whatever income tax bracket you happens to be in.
Correct.
So talking about the tax credit, when you think about tax savings, think about tax credit first. The tax credit could be anything. There are many tax credits. You have to know what applies in your situation. It starts with EITC, Earned Income Tax Credit. It's typically applicable for low income to moderate income, Sanjeevji. So it's sort of a misnomer, earned income tax credit. When the earned income is low, only then this tax credit applies.
Correct.
So if your income is lower, in the lower income tax bracket, earned income tax credit is one you want to be considering, you want to be thinking about, you want to be exploring. It can be thousands of dollars, few $1,000s you can get in earned income tax credit. If you have children, you want to consider child tax credit. Younger the children, more the tax credit happens to be. So if you have children, please do not forget to read about, to research child tax credit. After EITC and CTC, you want to consider American Opportunity Tax Credit. We want our viewers to know there are two types of education tax credits at a high level. One is American Opportunity Tax Credit, and the second one is Lifetime Learning Tax Credit. So American Opportunity Tax Credit is when somebody is taking education to further in their job, going back to school, going back to county college, and this can be up to $2,500 per taxpayer. It's a lot of money, and it reduces your tax liability. It's a tax credit. While lifetime learning tax credit could be up to $2,000 per taxes, meaning $1,000 per taxpayer. If you are doing married filing joint, your lifetime learning tax credit, which is very, very similar in nature, which applies to the training you are doing, the labs you are taking, the books you are buying, it could be anything.
Do you have to attach any receipts or any proof that you
Well, you have to have some proof of expenses. I don't need to see the receipt. If you have spent the money on your credit card or any sort of proof that you have is good enough.
Okay.
So that's lifetime learning tax credit. So we have talked about earned income tax credit, then we talked about child tax credit, then we talked about American Opportunity Tax Credit, then we talked about lifetime learning tax credit. Let's talk about electric vehicle tax credit. It's fairly new or became more popular in 2022, in 2023. Federal government is offering $7,500 of federal tax credit, not lowering your income, but giving you the money back. If you owe money to the federal government, you do not have to pay up to $7,500. A word of caution, if your tax liability is really not $7,500, if it's lower, the tax credit is limited to the tax liability that you have.
Okay.
It's not refundable tax credit.
That's a very important point to know.
That is an important point.
Yes.
The other thing you want to know, for a married filing joint couple, your electric vehicle tax credit $7,500 is only applicable if your income modified AGI is under $300,000. The good thing is now they have applied that credit, now they have availed that credit even for the used electric vehicle.
Okay.
If you are buying a used electric vehicle under $25,000, the electric vehicle tax credit could be $4,000 or 30% of your purchase, whichever is lower, which is a great thing. And this applies to 2022 and 2023. The credit only applies in the year when you take the delivery of the vehicle. Let's say hypothetically, if you booked the electric vehicle in December 2022, you paid them the money, but you actually got the delivery in January, you are expected to get the credit for the year 2023 in the year 2024 when you file the taxes. Going forward in 2024 and forward, we are expecting the government to change the rule where you can get the credit directly at the dealership. Meaning right now you have to get the vehicle and then at the end of the year you file the taxes. along with the taxes, you request $7,500. This is the process now.
Okay.
Starting 2024, when you're buying the vehicle, you can sign some paper, hey dealer, you take the credit on my behalf and give me the discount of $7,500
Yes.
at the purchase price.
Yes.
This is not there yet. This rule has not been implemented yet. We are expecting this dealer credit, meaning when you can use the credit to reduce the value at the dealership at the time of purchase, is going to be applicable from 2024.
Very interesting to know. So these are the main credits that
Absolutely.
that
We
you
call
just
them
mentioned.
tax credits as opposed to tax deductions.
Right. Now I just want to let viewers know, where can you get this much information on a TV show from a very certified, very knowledgeable and very experienced CPA, that's Mr. AJ Kumar. Let's move on to the next credit. Anything, retirement savings?
Absolutely. So other things, let's say you have explored all the options, you have availed all the tax credit. Now what else? What can I do now to get more benefits? Make sure if you have a W-2 job, you are maximizing your 401k deduction. If you are under 50 years of age, 22,500 is the limit. If you are over 50, the limit increases. 403B is in replace of 401k. If you are working for a non-for-profit company, make sure you are maximizing your IRA contribution. If you are investing money into IRA, a traditional IRA is tax deductible at the time of filing the taxes. While you are filing the taxes, ask the accountant, do you qualify for IRA contribution? Then decide how much taxes you owe and what savings you can see by investing into traditional IRA or Roth IRA. But make sure you are maximizing your retirement contribution either through 401k or 403b or through traditional IRA or Roth IRA. If you own a small business, you may also qualify for SEP contribution or defined benefit plan or cash balance plan.
Okay, so these are the topics that we covered under credits: earned income tax credit, child tax credit, education credits, retirement savings contribution credit. So these are the one credits that viewer, as a taxpayer, I'm sure one of the credits will definitely apply to you.
Well, you have to know what applies to you. You want to maximize the saving. The worst part is, Sanjeevji, if you don't request the credit, IRS does not come back to you and say, hey, by the way, you forgot to claim this
IRS
credit.
will never come back.
Here is the money.
No,
if
IRS will
you
never
claim more than what you're supposed to be claiming, IRS will be happy to send you the bill with the penalty. But if you don't claim the right credit, they don't come back and tell you forgot to claim this credit.
No, come on.
So the onus remains on you. The responsibility remains on the taxpayer to claim the credits that you qualify for.
Absolutely. But if they file taxes on their own using one of the softwares, or where they go to an accountant, where accountant either misses or forgets to tell them these things, right, then they will completely left out. The credit that's coming to them, they will not get it. And that's why I always say that contact Sai CPA Services for all your tax needs. Ask them a questions, go and meet them and have them do your taxes, and you will come to know that that your taxes are done so right. You got all the credits that you should be getting, or you're eligible to get those credits. You will get everything, and refund or to pay tax to Uncle Sam, either one, doesn't matter, but at least your taxes are done right. And that's exactly what we talk about in this show, the Tax Talk with AJ, right here on ITV Go. Now moving on to many things, as obviously there are late filers when it comes to tax returns, and April 18th is a deadline for personal tax returns, right? Earlier you talked about retirement savings contribution credit. Let's talk about contributions to retirement plans.
Absolutely.
Briefly.
So if you have a retirement plan, you want to continue to invest into the retirement plan. We are not getting any younger, and you will need a lot more money than what you think you will. So maximize the retirement contribution. Try to save the taxes. When you retire, your income tax bracket is going to be much lower than when you are working. So even if you have to pay taxes at that time, you will be in a lower tax bracket than what you are in. So maximizing the contribution, whatever retirement plan you qualify for, and everybody has a different situation. If you have a Schedule C type of income, you may qualify for SEP as we discussed, or you may qualify for a defined benefit plan or cash balance plan. If you have a S Corp, you may be able to contribute 25% of your wages, W-2 salary, to a retirement plan. You may have 401k, you may have 403B, you may have IRA, traditional growth. So there are a lot of retirement plans that depending on your situation you can qualify for. You need to see what's applicable in your case and try to maximize that contribution to the retirement plan.
Because everyone's situation is different, everyone's
Absolutely.
income brackets are different, and then the tax bracket they are in, it's all different. So it depends upon you. But you should definitely look into it. And it's late for this year, but for the next year taxes, you can also get an investment advice from Sai CPA Services before the end of the year. So keep that in the mind, and hopefully it will work out better for you. With that note, we're going to take a short break, and when we come back, we got more coming your way regarding your taxes in this Tax Talk with AJ. Stay there. Welcome back to the second half of the Tax Talk with AJ. You will find us right here in the same slot that you're watching us every week, and we'll bring you all the latest and important information that you really need to know when it comes to your taxes, whether you are a business owner or whether you file personal tax return, you're working and everything else, or even if you're a consultant. Any kind of category you are in this show, you will get the right information about your taxes, of course, courtesy of Sai CPA Services, and Mr. AJ Kumar shares his knowledge with us. Before the break, we were talking about contribution to retirement plans, and I think you want to add a line or two.
Absolutely. We want our viewers to understand that some of these plans you have to contribute before the end of the last year. Say 401k, 403b, they must be open and contributed for before December 31st. But there are some plans, SCP, defined benefit plan, cash balance plan, IRA, that you can still contribute. So for SCP and defined benefit plan, the deadline is March 15th, but for IRA, the deadline is April 15th. If you file the extension, you can even contribute later. So just because you did not plan it right last year or you forgot to plan, you still may have some opportunities left. So while you're doing the taxes, make sure you let your accountant know, let the CPA know that you want to maximize your contribution to the retirement plan, and let the accountant figure out what plans you qualify for, and then you decide how much you want to contribute and what savings you can get.
All right, good point. Now let's move on to charitable contributions.
Absolutely. So after we have talked about the tax credit, the retirement contribution, what else? What can I do? Everybody, all of us, goes to the temple, the church, the mosque, and we donate some money over there. And a lot of times we don't really claim it on the tax credit, on the tax return. But make sure you claim your donation on the tax return so you can donate more. I'm not asking you to take the benefit of your religious feeling. I'm saying you can do more religious work if you are getting money back from the government.
Sure.
So just remember, the receipts have to be contemporaneous in nature. If you are donating money to the temple, you cannot really say, if the need be, I can get the receipt. That does not work. At the time of filing the taxes, the receipts must be with you. We call it contemporaneous receipt. You can't really get the lupus receipt where the amount is not listed, or Salvation Army receipt, donated one bag of clothes and the amount is not listed. That does not work. The amount has to be listed on the receipt, the date has to be there, the item has to be there, especially if it's a like-kind donation. Make sure you create proper paperwork, you have all the right receipts, and make sure you maximize your donations, benefits, so you can donate more, you can do more charitable work. And when it comes to charitable work, you can also take advantage of the mileage, any out-of-pocket expense. If you are going to school, teaching something, whatever books you are buying, whatever stationery you are buying, if you are traveling for the charitable work, number of miles you are traveling, that's also deductible expense. The only thing that's not deductible is the time value of money. If you are making $20 an hour in your job and you spend 2 hours in some charitable work, you cannot claim $40. Your time value is not deductible. Deduction is not allowed for the charities to the foreign countries. If you are sending money to India, even if it's a charity, a registered charity in India, unless that charity is registered with the US government, and there are a lot of Indian charities that are now registered with the US government as well. So you really have to see, money has to be given to a US registered charity in order to be deductible.
Even if you get a receipt from India, a temple in India?
It does not matter.
Okay.
Unless the charity is registered with the US government, it's not a tax deductible charity. The funny part here, if you give money to the priest, if you give money to Panditji, it's not deductible. If the money is given to the temple, then it's deductible. Assuming the temple is registered as a 501c3 charitable organization with the IRS. So unless the charity is registered with the US government, it's not allowed.
Okay, very good, interesting. Charitable contributions, and then you said rightly that we like to donate because we are very generous and kind-hearted, and we respect our religion and donate. But these are the things that AJ just mentioned. You should be, looking into it and be very careful. What is harvest investment losses?
Right, absolutely. A lot of people miss that. I'm glad you asked, Sanjeevji. A lot of people, especially this year, see a lot of losses in the stock market. I mean, if you look at 2021, people who could not spell their name, they were coming in, I made $100,000 in the stock market. Holy cow, I'm in the wrong business. I'm doing taxes here, I can't make $100,000. But now in 2022, the situation is completely reversed. People who thought they were experts, they are losing money in the stock market.
Absolutely.
So we want to talk about harvesting the losses that you have in the stock market. So the plan is, if you know in advance what losses are you having, and you can easily see through your portfolio, and you see a stock where you have large gain because you bought this stock 10 years ago, 15 years ago. If you can plan it right, where you can sell some stocks where you have large losses and a stock where you have large gains, then in that year you can offset the gains with the losses. Then you don't have to pay the taxes on the large capital gain. So the plan is, when you have losses in the stock market, try to sell a stock or two where you have large gains to offset that losses in the same year. Make sure you don't end up buying a similar stock within 30 days. Otherwise, under the wash sale rule, your losses will be denied. So if you are selling a stock, let's say if you are selling Oracle, don't try to buy Microsoft within 30 days. Then we'll see it's a similar stock that you sold and similar stock you are buying within 30 days, 31 days, then the losses will not be allowed.
All right, as one of the main things that we're discussing in this show is that how to lower your tax liability and everything. Health savings account is one of the ways to do that you can contribute to your HSA or health savings account to lower your taxes. How does that work?
So HSA is a plan that's offered by the employer. You can't, for an individual, if your company is not offering the HSA, you can't really go out in the market and buy it yourself. But in 2022, the limit was $7,300. So the idea here is, when you have insurance through your job, a lot of expenses are not covered by the insurance. Your copay, your medicines, your over-the-counter drugs, they are not covered by the insurance. So how do you take advantage of those medical expenses? If you remember, the Schedule A, itemized deduction, does not give you any benefit if your total medical expenses are 7.5% or less compared to your AGI. So the way you can take advantage of this medical expenses is by contributing through an HSA. You can, in 2022, the limit was $7,300 for the whole family. You can contribute $7,300 into the HSA plan, and you can pay all the medical expenses through that HSA plan, and the $7,300 is not tax deductible for you. It's a great plan.
Not tax deductible, but it lowers your taxable income.
That's right.
Yeah.
So the $7,300 comes out of your W-2 income directly.
Yeah,
so it's not part of the taxable income for you.
Correct. But it lowers your taxable income.
That's right.
Investing money into 401k, has it gotten better, easier?
Well, the problem with the 401k or 403b, if it's a non-for-profit company, is you alone cannot decide if you want to contribute to the 401k unless your company, where you work, is offering the 401k, and there is an administrative fees to offer the 401k, which can be thousands of dollars.
Yes.
So a lot of small businesses do not offer 401k or 403b.
Well, besides the fees, it has to pass through the test.
Because yes, that's right. In order for the plan to be a qualified plan, the business must contribute up to 4%.
Correct.
Or must match up to 4% of the employee contribution. So the company has an expense in terms of contribution, forced contribution, as well as the company has an administrative fees, which can be thousands of dollars to start the 401k. So a lot of small businesses do not offer 401k. But if your company does offer 401k, you have no excuse not to participate. You must participate, and you try to maximize the 401k contribution to lower your taxable income so you can maximize your tax benefit.
And also you're putting money away for your retirement or
Absolutely.
even before retirement in any situation in emergency. If you ever need funds, to take care of your personal matter, that fund is available with penalty and the taxes that you have to pay.
No, actually, you're right. A lot of companies have this condition in the plan, built in the plan, where a lot of people can withdraw the money for 60 days, for n number of days, and put the money back.
Yes.
So if you need the money for the emergency, but please check with the employer, please check with your plan documents if that's an option allowed in your case.
Okay. Now let's talk about one of the most popular deductions if you're itemizing your tax return, which is Schedule C.
Absolutely. So Schedule C is for self-employed people, Sanjeev ji. If you're getting a 1099 income, consultant income, you can claim a lot of expenses, right from the business startup expense, the accounting expense, the advertising, the marketing, the travel, the food, the entertainment, the website, anything, laptop, couch, table, office chair, anything that you can imagine that you need to run that venture, anything that you need to run that business is all allowed claimable expense. Now in 2022, they made the meal expense to be 100% deductible. It used to be 50% deductible.
Yeah, exactly.
So Schedule C people or people who have a statutory job, meaning the insurance agent, the travel agent, the realtor, they have this statutory job where they are based on commission. Their income is not fixed. They are not, even though they are on W-2, but their income is considered as more commission or agents, some sort of agent fee than the W-2 income. In those cases, statutory employees are allowed to claim all the job-related miscellaneous expenses.
Okay. Quickly, let's talk about gambling losses. You go to Atlantic
Absolutely.
City, you go to Las Vegas, you lost some money.
I'm glad you asked. A lot of people forget to claim the gambling losses. They lose the money and they're so sad about it, they're not even tracking how much money they lost. The funny part
Because they don't
is,
want people to know they went to
I
casinos.
agree, 100%. There is a this factor,
Correct.
embarrassment factor,
Correct,
that they
exactly.
don't want anybody to know about it. The funny thing is, if you win more than $600, a document is already produced and submitted to the IRS and the state on your behalf
By the casinos.
by the casino.
Exactly.
It's called 1099-G.
G.
And you have to pay income tax on that earning. Now think about a situation. You were going to casino, you lost $10,000. Suddenly, one day, you won $1,000. Now, forget about 10,000 loss. You have to pay tax on that $1,000. How is that fair? But if you had kept the record properly, then you can claim your gambling losses to the extent of gambling income. Then you don't have to pay the taxes on the gambling winning. So
Very well.
It's important to make sure you keep proper documents, proper record for all your gambling losses. God willing, if you win, then you don't have to pay taxes on that winning to the extent of the gambling losses.
Very well. Talked about all the credits that you were entitled to, that you can get. Talked about all the deductions that you were entitled to get, you should get in order to have your proper taxable income, to have your taxes done right, and also to get a refund or pay taxes. But most important thing is to do your taxes right, and that's what Sai CPA Services is known about. Multiple locations in state of New Jersey, in person, over Zoom, over phone, any kind of meeting is possible. They have their on hand about 10 CPAs, knowledgeable, experienced CPAs on hand, will help you out with any tax matter. When I say any, means any personal or corporate tax matter. Do give them a call, 908-380-6876, or visit their website, saicpaservices.com. AJ Kumar, thank you so very much for your time.
My pleasure.
I am Sanjeev Pandya. Until we meet again, same place, same time, I wish you happy and the tax-free days ahead. So long.
Thank you.